All right, if you can see my face and hear my voice, I like to just type one in the comment section. Just type one in the comment section if you can hear my voice and you can see my face. If you can see my face, just type one in the comment section. Just type one in the comment section. All right, so if you can see my face, please type one in the comment section, and then um, let's take a step further from where we stopped the last time. Okay, let's take a step further from where we stopped the last time. Okay, so I'll quickly share my screen, then I will go to the chat. I'll go to live chat. Okay. All right, so on the chat here, you are seeing, I hope you can see my screen now. So we said when the market is on the uptrend, we said basically there are three tradable market patterns. Market patterns. Market pattern is different from chart patterns. Market patterns. And then so when market is making series of higher highs and higher lows, it is said to be in an uptrend, and therefore, don't forget that looks like poem to you, right? But the secret of making money. Therefore, you look for the opportunities to buy. Now, this opportunity to buy is what we're going to be doing extensively from the next class. We're establishing the foundation. Now, therefore, there are so many ways to look for the opportunities to buy. So many ways. So many ways to look for the opportunity to buy. So when market is making series of higher highs and higher lows, it's said to be in an uptrend. And so when market is making series, and therefore on that uptrend, you'll be looking for where to buy, where to join the buy. And there are so many ways to develop strategies, so many strategies you can develop in looking for opportunity to buy on an uptrend. Then when market is making series of lower highs and lower low, you decide to be in a downtrend. Therefore, you look for the opportunities to sell. And just like in uptrend, there are so many ways uh, to determine an entry and exit on the low on a downtrend. On a downtrend. So many ways. So many ways, we'll be discussing plenty of the strategies that you'll be using in securing opportunities downtrend. And the same thing happens in the ranging market. The ranging market is when the market is moving between a fixed demand and supply zone or a fixed resistance and support. Demand and supply, resistance and support. They are similar. They are probably mean almost the same thing, except that one has a fixed price, the other one has a zone. Okay, so when the market is moving between a fixed resistance and a fixed support, it is said to be in a ranging market. So market is not moving down, it is just moving sideways. It is also called a sideways market. A sideways market. Market is moving from left to right. It's not moving up, it's not moving down, it's just from left to right. It's called a sideways market. It's also called a between a resistance and a support. Is moving between a resistance and a support. So it is called a ranging market. A ranging market is between a fixed resistance and a fixed support. Okay, where seen as the ceiling, while the is seen as a floor. It's like when you are bouncing a football. If you throw it down, it's supported by the floor. You throw it up, it's resisted by the ceiling. It is supported by the floor, resisted by the ceiling. So something is breaking. It's not moving beyond the ceiling. It's not going down lower than the floor. So the support is the floor. The resistance is the ceiling. The demand zone is the support, the supply zone is the resistance. And so that's just how it works. So I'd like us to go to the charts now. Let's see what we can do using the chart. Let's share the chart. Let me share my chart with you. Okay. Um Sharing my chart with you. Okay, so let's get to this chart. Let's see what is happening here. This is gold, and gold is on 1 hour time frame. Let me see something that happened on. Let me see GBP USD before we move to gold. This is gold. First of all, let me stand it. Uptrend, downtrend. We are determining the trend of the market. I advise that you use a higher time frame. A higher time frame. Advise that you use a time frame. A higher time frame. Okay. Advise that you use a higher time frame. And so checking your trend on 5 minute time frame is not really advisable. I've seen many of you doing it, but because I've not mentioned it, so I could not say you were wrong. Okay. So let's to determine the trend of the market, it has to be from a higher time frame. You know, preferably, you know, 1 hour upwards, 1 hour upwards, 1 hour, 4 hours, daily time frame, weekly or monthly, upwards, 1 hour upwards. Okay, usually I use 4 hours and daily time frame, 4 hours and daily time frame. So that's how you're able to know the real trend. Why? Because the lower the the lower the time frame, the louder the noise. The lower the time frame, the louder the noise, and the less trustworthy the support and resistance could be, because they could be false. They are not the higher the time frame, the more reliable the zones are, the more reliable the support and resistance could be. The higher the time frame, the more reliable the support and resistance. So if I have, for example, you can see the exact. Oh, you can you can imagine what we got. What we got here. So the market is forming higher highs and higher lows. So we have over here now we have the high, then we have, let me just call it the higher high, the high, the low, that is low, higher high, then we have the higher low. Okay, higher low. Then we have it again, we have the higher. So when the market is forming the series of higher highs and higher low, it is said to be in an uptrend. Now, look at this. When the market got to this place and started a pullback, this place has become a resistance. Okay, this place has become, you have resistance, you have support, we have resistance, you have support, you have resistance, then you have, okay, I think you have support here, you know, then like that. So this becomes support, this becomes support, this becomes support, this becomes resistance, this becomes support again, then this become equal. Resistance, support, you know, then you have resistance and like that. Now here now, so let's get to and begin to pull back. It is called that place, that turning point is called resistance. Now where you get lower and begin to move again in the direction of the trend, that place has become support. And then we have resistance, support, we have resistance, support, we have resistance. So the higher high is usually the resistance, the higher low is usually the support. Higher high is usually resistance, higher low is usually support. But each time, for this market to continue to be in an uptrend, the next move must be breaking the previous resistance. It must continue to break the previous resistance, because when it stops to break it, then maybe the market may want to have a turnaround. The market may want to have a turnaround. Okay, the market may want to have a turnaround. You know, for example, and instead of the market decide to, you know, to move at this previous support, the thing that you'll be looking for, the movement of price, what the price is forming, what is price forming in the market. You have a support, then I have another support, then I have another support, then I have another support. Look at it. Then I have another support. I have another support here. Okay. Then I have, so let's say I want to draw another one now. I have let's say, let me change the color. So I have resistance, I have resistance, I have resistance, I have resistance, I have my resistance is usually the higher highs and higher lows, higher highs and higher lows, higher highs and higher low, higher highs, higher low, higher highs and higher low. So I'll be looking for opportunities to buy. Make sure when you are doing this, when you are checking this higher and higher low, you are using an higher time frame to determine the trend of the market. And of course, you're not necessarily going to be trading on this higher time frame, but you are first of all check your trend on a higher time frame. I was telling you the other day, and I said when you open your computer to trade, you enter market. As soon as you enter market, the first thing you want to ask is that where is the market going? What in the world is the market doing? What is the trend of the market? Is it buying? Is it selling? Or is it a ranging market? Is it a bullish trend or a bearish trend or a ranging market? So that is the first thing that you must find out. That's the first thing that you must find out. You must determine that. But if you don't determine that, you will, if you don't determine that, you will enter. Okay, so let's see this also. Let's see the downward movement here. Let's see the downward movement of GBP/USD 1 hour time frame. This is GBP/USD and it's 1 hour time frame. So you see that market is actually moving in a downward direction. You can see trend line now, but market is moving in a downward direction. So it's forming okay, and then it's forming lows too. It's forming lows too. I think we are going to be using yellow for the low. So market is forming low, then market is forming another high, market is forming another high, okay, then we have so you can see market is forming higher highs, lower highs and lower lows, lower highs and lower low. So it's said to be on a downtrend. And therefore, I'm going to be looking for opportunity to sell on this market. Once again, I'm checking this on higher time frame. And then, so the example I need to do now, all of it have done the assignment. You go back to an higher time frame to show me the higher highs and higher lows, not on 5 minutes like you have been doing, not on 1 minute, not on 5 minutes, not even on 15 minutes. Okay, so you do it on higher time frame, like 1 hour, 4 hours, daily time frame. It's gonna be interesting if you can do it on daily time frame. Okay, 4 hours, daily time frame, very beautiful, very beautiful. That's how you determine the transit now. At the lower highs and lower low, then you know that oh, it has started forming. It's not made everything. Sometimes it support is not up, then it's not down. You can see something around here now that we have a little bit of ranging market. You have a ranging market here now. You can see we have a ranging market where my fixed resistance and the fixed support market get to this place, it's moving down, then it get to this zone again. On the why before breaking through that resistance and going and continue in its motion. And you can see something around here again. You can see something similar. wanted to happen here again. But let me do. Okay, and again, you can see that market got to this place, turned back, got to that place again the second time, turned back, and it stayed a while within. Then it's not breaking the support here. It came here, then came here again, came down, returned to the top, and then eventually it broke it. So within that period of time when that market is doing that, it is called a or resistance or supply zone. Then we call this place demand. We call it support. Support or demand zone. Don't forget the word zone. Okay, demand. That's how you know from here to here. It's from here to here is a downtrend. Okay, I want to check. Okay, from here to here is a downtrend. Is changing direction here. From here to market operates. But you need to establish that first before I start to teach you strategies on how do you making money. That is so sure. That and then log in, in the physical class you have done now. Within an hour, you can see uptrend, market is buying, then the market itself, then it breaks the trend of the market. Then let's see what happens on gold. You determine your trend on a higher time frame. You determine your trend. You check out the trend on a higher market is forming series of higher highs and higher lows. You can see market is forming higher highs and higher low, and then vicinities to buy. We're looking for opportunities to buy. This is a so let's see how this one goes. You see market take this direction. Okay, uptrend, then it came again, then it went up, then it came down, then up, hop, hop, then down, hop, down, hop, down. Now, this market has actually formed this. Okay, market has formed this. Market has formed, see what the market form is forming, higher high and higher low, higher high and higher low, higher high and higher low. Now, there's something I want you to understand right now that is very, very important. Now, this movement, the longer side of the movement that shows the direction of the market, the longer move is usually the one that shows the direction of the market. This one is longer than this one, 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 is longer. So the longer side is the direction of the market. The longer side is the direction of the market. And because as a retail trader, trend is your friend. You must never trade against the trend. At least at the beginning. You must never trade against the trend. So if the trend is buying bullish like this, you're looking for opportunity to buy. Don't look for opportunity to sell on this kind of trade now because you will lose money. You can see so now this longer side is called impulsive movement. It's called impulsive movement. Don't forget it. Impulsive movement. Okay, impulsive movement. Then this other side is called retracement. Retracement or pullback or correction. Okay, you have you know, an impulsive movement, pullback, an impulsive movement, pullback, an impulsive movement, a pullback, an impulsive movement, a pullback. Okay, so this, is an impulsive movement. Okay, is an impulsive movement. This is an impulsive movement. And then we have, so no, this is an impulsive movement. This is an impulsive movement. Then we have the pullback again. Okay, we have the pullback again. You see, you have the pullback. Okay, then we have impulsive movement again. You have the impulsive movement again. Okay, I hope you understand what I'm saying there. I hope you understand. Okay, another impulsive movement. Then impulsive movement. So that's how market move. Market move this stand for it to continue to. It must not break this. It can break the previous resistance, be on the same level with it, okay, but it must not break it. And then it gets somewhere around here, it stops. Then it moves. We say it is in an uptrend. We say it is in an uptrend. Therefore, we'll be looking for opportunities to buy. Looking for opportunities to buy. So our center focus is here now, and then we have it here. You have it here. You have it there. You have resistance, then you have support, then we have resistance, then we have support, then we have resistance, then we have support, we have so when you see something like this, market is in an uptrend. The longer side is called impulsive movement. The longer side is called impulsive movement. Okay, you have impulsive movement there. You have impulsive movement. You have impulsive movement. Oh. You have impulsive movement, and then here now you have, okay, you have a pullback. So here we are having a pullback. Let's just call it pullback. Pullback. Because market does not move. Please understand that market does not move like this. Market doesn't move just on the straight. Then it has a pullback. It has make an impulsive movement again. It has a pullback. Make an impulsive movement again. It has a pullback. That's the same thing for a downtrend. The same, lower. It mustn't break it. It can be on the same level. Okay, it can be on the same level, but it must break the previous support for it to remain in a downtrend. Then when it's going up, it must not break this previous resistance. It mustn't break it. Okay, but it can come lower. Okay, it must always break the support, but it must not break the resistance. It mustn't break resistance. It must not break the resistance, but it can break the support. It must not break the resistance. So it can continue to go that way. This is how market moves. Market doesn't move in a perfect straight line. No, market does not move on a perfect straight line like this. it's adjusts, it gives you a pullback, reality of the price movement. Okay, so we have on the downside too, we have impulsive movement, we have an impulsive movement, okay, we have an impulsive movement, we have an impulsive movement on the lower time frame. We have an impulsive movement here, then we have pullback. We have a pullback. This one refused to. Then we have a pullback here. Okay, pullback is usually we have a pullback or retracement, retrace, retracement or correction, retracement or correction. You have it here. You have pullback, retracement or correction. So you have it like that, like that, like that. That's how market move. And when you have, for you to have a ranging market, you have price moving like this. Then you get to a certain level, come, it stalls, and then it's coming down again. Then it does break like this. So within that period of time, when it is within that fixed resistance and support, it is said to be that at the support, you're supposed to look for a buy, at the resistance, supposed to look for a sell. Supposed to look for a sell. So you have the resistance there, okay, or supply zone, supply zone, and then we have the support here, and we have, which is a demand zone, demand zone. And so that is I believe by now you understand exactly what we mean by market pattern, whether bullish, bearish, or ranging market. You see, a because the problem there is that the take decision is not conspicuous enough, is not clear enough, is not clear. There's no clear demarcation between the support and resistance. So if the market is choppy or the market is consolidating, the market is either consolidating or is choppy. So at such instance, move to the next pair that is on your list, or you close your computer and walk away. So uh, that's what I want to like share with you tonight. So now, if I may add one point to this, okay? For example, let's look at this now. Like, one of those days when I was teaching online like this, I was asking them to repeat after me, and then they were typing in the comment section. So what happened is that when the market is an uptrend, I will never sell this market except the support is broken. I will never sell this market except support is broken, and except never sell except the support is broken. I will never sell except the support is broken. Okay, the same thing for a downtrend, the same thing for a downtrend. I will never sell except the stand is broken. I will not sell except this stand is broken. I will not sell except the stand is broken. I will not sell except this stand is broken. So now you now imagine by the time the price comes here and this and break this price come down there and break, I start thinking, I think this is not just a pullback now. This is a reversal of direction. So because why? Many people lose trade because they misplace, they think a pullback is a reversal. That's why most people lose trade. You see, a pullback is not necessarily a reversal until you have confirmed it's a reversal. And for you to confirm it's a reversal, there must be a change in the direction. There must be a change in the market pattern. The market pattern has to change for you to assume, oh, what has been happening before, there's a change. Oh, the bullish market has changed to bearish market. Or if the market is bearish, there must have been, for example, we look at this bearish market. Okay, every resistance, every new resistance, which is a lower high, is lower than the previous one. It has to be lower. It has to be low. It has to be lower. But the moment you see that, oh, this low, okay, it has broken it, then you now say, oh, I think the price, I think the direction is about to change. Instead of let me switch my bias. Instead of thinking of selling now, I think I'm gonna have to like prepare myself to begin to buy. Prepare myself because the market pattern has already changed. The market pattern has already changed. Some people call it change of character. So now I will never buy except the support is broken. I will never buy except the support is broken. I will never buy. I promise myself I will never buy except the support is broken. I promise myself I will never buy except the support is broken. Sorry, resist. It's a resistance I'm supposed to be saying no. Sorry, I promise I will never buy except this resistance is broken. I promise I will never buy except this resistance is broken. I promise I will never buy except this resistance is broken. I promise I will never buy except this resistance is broken. Now the resistance is broken now. I'm going to start looking for I'm going to start looking for opportunity to buy now, but that thing needs to be confirmed. It has to be confirmed because sometimes there could be a break on the previous resistance, and then the next thing that the bracket could close lower. It means that that is still valid. It means that the confirm that packet has changed direction. I think I did the example, one example like that when I first of all drew out the I think it was on GBP USD. You know, when the first thing I drew, the price is broken. Price is broken. So there are certain things you must do. You must find out before you assume. Oh, the market has actually changed direction. I need to switch my bias. If I've been buying before, I want to start to sell. I want to start to sell, and that's how they make sure when you are in a downtrend, you will not see change your bias except your resistance is broken on a higher time frame. On a higher time, this is broken. I will not think of selling. I will always be thinking of buying. So that is this basic foundational principle of trading. Every other thing will be built on this foundation that we have laid today. And I'll see you again tomorrow, or I'll see you in the next class. I'll see you in the next video. Okay. So if you have questions, please let me know. So what you do now, you do the same assignment I've given to you. This time around, you will label higher high and higher low. You also label impulsive movement, retracement, or pullback. You will label both the higher and higher low, or then you label the kind of movement we have, the impulsive movement or pullback or retracement, impulsive movement. Then you give me the ranging market where you have fixed resistance and support and or fixed demand and supply zone. Demand and supply zone. Thank you. I'll see you in the next class. I'll see you in the next class. Thank you.